guys, you've joined us on Money Control. I'm Manisha Gupta, and we're talking about industrial commodities today. The metal prices have continued to decline after 2 weeks of losses. This week as well seems to be trading in the negative right now. It has to do with the strength on US dollar, the hawkish stance from the US Fed as well. So when you look at the LME metal index, it gained up by nearly 10% in the month of January, but Feb has seen a pullback, and this is the reason that we are trading just about with 3% of gains for the year by now. So nearly 6 to 7% lost in case of February there. If you look at the inventories in Shanghai, well, that has continued to increase and that is putting pressure onto the prices here. So take a look at aluminum. On 1st of January, the inventories that were in Shanghai were at around 95,000 tons. As of now, they stand at 268,000 tons. So that is the reason you have seen decline in prices come in. Same is the case with zinc stocks from 85,000 tons on 1st of January to almost 1 lakh tons is what we are trading at right now. Lead also has seen a similar gain from 35,000 to 51,000 tons of inventory standing right now. So Shanghai inventories have continued to increase, and so is the case with LME as well. But remember, we started with a very low base to begin with because the copper inventories were the lowest in a decade for the most part of last 18 months. If you look at zinc inventories, they hit a lowest in 90 years, and aluminum inventories were the lowest since 2016. So the kind of jump that we are seeing in many of these inventories comes on a very low base. But nonetheless, the markets do believe that the Chinese demand is not as strong as we were earlier thinking about. The manufacturing data for the last 6 months of 2022 has been weaker, and for the month of Jan as well, whether it has been about China, US, Europe, the manufacturing numbers have come in on the weaker side, and that is putting pressure on many of these metals as well. Well, as far as the China reopening trade goes, we saw most of that play out in the month of Jan. Feb is looking at more concrete, sustainable data coming in from China. And until we see that, you could be looking at the metal prices continuing under pressure here. I also want to tell you on how the prices have moved. On 1st of January, if copper was trading at 3.76, on 31st of Jan, it was trading at 4.23. So from those kind of highs, we've seen a decline up to nearly 4.10 at this point in time. Same is the way with aluminum as well. We started the year with 2,300. We made a high of 2,650, and we are trading at $2,400 a ton right now. And when you look at the zinc prices, from 3,000 of a beginning to this year to a high of 3,400 and trading at around 3,200 right now, we've made a bell curve here, and we've seen prices come off its high in case of many of these metal prices. What the street will now watch out for is the kind of economic data that we see coming from US and China, and what is going to be the US Fed stance moving forward from here. Until now, the inflation numbers in US are still on the higher side, so that's a bit of a concern. But the US Fed meeting is still slightly away. So until then, the kind of data that continues to keep coming in is what will impact the metal prices. Having said that, the kind of sell-off or profit-taking that we've seen in equity markets also seems to be weighing onto the metal space. So some consolidation, even some selling cues could be coming in for many of these metals, including copper, aluminum, zinc, steel as well, continues to trade on the negative side.